Now it's time for our spotlight. Our spotlight is on AZEK Company. Stock is up nearly 30% this month. It beat on its quarterly earnings expectations. This is all about your home, your outdoors. Joining me right now, CEO Jesse Singh. Thank you so much for being here. So what went right in the quarter? You seeing the demand that you had been hoping? Tell me about some of the things that have been working in 2023.
Yeah, I think as we look at the year in its entirety, we started off the year going through a bit of an inventory correction in our channel, which I think many industries needed to go through. But what we saw throughout the entirety of the year was really steady consumer demand. And if you think about where we play, in the market, is we focus on consumers first that own their own homes. They tend to skew more premium, and they're looking to create outdoor living spaces through our TimberTech brand and through our AZEK brand. And throughout the entirety of the year, we saw that demand hold up. And in fact, we saw double-digit end-use demand as we moved throughout the season. And then on top of that, many of us have gone through some raw material ebbs and flows and increased costs. As those subsided, we saw the benefit of that as we moved through the back half of our year relative to our margins. And so in general, a really nice demand story coupled with a nice margin expansion story, which is what we expect, and we were able to deliver in the back half of the year.
And when we look at all of these names, TimberTech, AZEK Exteriors, Ultralox, Versatex, Struxure, INTEX, which ones seem to be leading the way as far as what people are really looking for when they think of AZEK? They're looking at these names in particular.
Yeah, so if you take a look, our primary brand in the market for decking, deck rail, and exteriors or accessories is our TimberTech brand, and so that product goes out and it's used in replacing wood decks on the outside of homes, and it's indistinguishable from wood and gives a 50-year warranty and creates a great outdoor living space. Our AZEK and our second brand, Versatex, they're really around replacing wood trim on the outside of houses and also niche siding. And those two brands really make up about 90% of the business. And in both cases, one more on the wall on the outside and around the siding, and the other around the deck and outdoor living. Both of them have really, first, they're both very, very strong brands, and they both continue to convert wood on the outside of homes. And that's a key part of our growth equation. And just one side point is, as you look over the last 10 years, we're a double-digit grower. That's our value proposition to ourselves, to our employees, and to our investors. And that really, that's driven by this focus on being able to convert wood on the outside of houses. And we have continued to see that with our consumers over the last few quarters.
Yeah, and as I see this, and you said that's about 90% of the business. Also, some of the analysts were talking about the Vicom sale, higher spending on marketing may have affected the numbers for guidance, going a little bit in the outlook part of it. Your thoughts? Are you having to spend more on marketing? I mean, we got in, for example, pending home sales today. Northeast seem to be doing better. I know you have both a residential and commercial footprint. Are you marketing more?
Yeah, I think first, if you take a look at our business, we really rely on people living in their homes as opposed to the transacting of homes. And so if there's home turnover, that's a different segment for us. We benefit by people really living in their homes. I think for us, we're building this for the long term. And because we've had such good margin performance, we view that as an opportunity to reinvest in the business. And I think what we highlighted is we expect that margin performance to continue into 24, and that'll give us the ability to continue to invest. We don't need to. We're doing it to continue to sustain our double-digit growth. And then obviously we sold the Vicom business, which allows us to really focus more on the higher growth, higher profitable residential business. And then one quick comment, you mentioned guide. I think for us, we're guiding for 24. We're one of the earlier folks. And so what we have done is we put out what we think is a very conservative view of what the market could do, and then our growth on top of that. Once again, it's difficult to predict 24, except that we believe we can continue to outperform the market by 5 to 7%, independent of what the market does. And we believe there's the potential for a solid market in 24, but it's way too early to call, given the macroeconomic factors that we see right now.
Look, there's no doubt, the analyst community loves you. The shareholders must be very, very happy. They see a one-year percentage change of 93% gain for the stock, so I know they're happy. BMO put an outperform, a $39 target. Stifel has a $38 target and a buy rating. Both of those are higher than the current environment. Just a big picture as a CEO running a company like this, so we always like to ask some of the bigger trends. How are you seeing supply chain? How are you finding labor? Are those things improving? Are they headwinds, tailwinds?
Yeah, we went through a cycle, as I mentioned, really about a year ago, where we had to deal with supply chain issues. In particular, we had excess inventory with our customers. And then for a period of time, for a number of reasons, we had elevated raw material costs. From where we sit now and really what we've seen over the last 6 months, and as we move forward, we're running normalized operations. We've got plenty of capacity. We've got access to really high quality labor. We see a steady flow of materials, and we make in the U.S. Primarily, and our factories are scattered throughout the country. And our largest raw material is recycled materials. And we're the largest vertically integrated recycler of PVC. So in general, I would describe the environment as incredibly normal. Lead times are normal, and we continue to supply the market. And then as you long term, we're in a market that's going to benefit from fundamental tailwinds of demographics wanting more homes. There's a 10-year focus on outdoor spaces. And we see a huge opportunity over the long run to continue at or above a double-digit growth rate. And so, the way sum it all up, it's pretty normal right now, and we're operating under our normal growth and margin expansion cadence.
All right, Jesse Singh, great to see you, CEO of the AZEK Company. Thanks for being here today.
Great, thanks for having me on.
And congratulations.